Welcome to the Retirement Guide Podcast. I'm your host, George Jameson, the owner of Capital Wealth Group, a fee-only advisory firm. Whether you're nearing retirement or already retired, join me each week as we explore the world of retirement planning and equip you with the knowledge and tools you need for a successful retirement. Hi, I'm George Jameson, certified financial planner and founder of Capital Wealth Group in Columbia, South Carolina. If you're listening right now, you're already ahead of most folks. You're thinking about retirement, while many people aren't. But here's the catch. Being interested in retirement planning isn't the same thing as being good at it. Today, I'll share 5 big mistakes I see all the time. Avoid these, and you'll be way ahead of the game. So mistake number 1, starting with the investments instead of the plan. This one's everywhere. Should I put my money in so-and-so mutual fund? Or what about this ETF or that ETF? Should I buy stocks? How about NVIDIA or Tesla or whatever stock? I'm buying these dividend stocks. Great yields for retirement. Or I've been watching videos on selling options or buying puts, and I think I can retire early that way. Now, these are all fine questions, but they're the wrong first questions to ask. It's like asking what tools you'll need before you even know what you're building. Are you building a tool shed in your backyard or a skyscraper? The answer changes everything. Investments are just tools. You first need to know the plan or blueprint. So like the lifestyle you want to live in retirement, the income that lifestyle will require, your sources of guaranteed income, your tax situation, your tolerance for risk so you won't sell at the wrong time. Only then can you start picking the right investment tools for your job. Otherwise, you risk investing in the wrong things for the wrong reasons. And even worse, drifting from investing into gambling. And I've seen too many people do exactly that. Now let's move on to mistake number 2, believing there's a magic tax move everyone should do. A common mistake is thinking there's one silver bullet tax move for everyone, like always do Roth conversions, or never do Roth conversions, or never convert above the 12% bracket, or traditional 401ks are dumb because taxes are going up, and so on. If you've ever been in the comments section of any financial video or Facebook group, you know people get very dogmatic about this. Here's the reality. Tax planning isn't a one-size-fits-all. It depends on your account mix, income timeline, and whether your future tax rate will be higher or lower than today's. Roth conversions, traditional contributions, capital gains harvesting, these are all just tools, not a plan. Take 2 people who look identical on paper. Both are 45, both earn $150,000 a year, both max their workplace 401k plan. Client A currently has very little in pre-tax accounts. For them, deferring taxes now with traditional contributions probably makes sense. They can draw strategically in retirement to keep their taxes low. Client B, on the other hand, already has a very large amount in pre-tax balances. Future RMDs could force big taxable withdrawals, pushing Social Security into taxation and triggering Medicare surcharges. For them, a mix of Roth contributions now and targeted Roth conversions later could make sense and be the smarter play. My point is, don't follow blanket rules like always do Roth conversions, never do Roth conversions, or never convert above the 12% bracket. Sometimes paying a bit more tax now avoids paying a lot more later. Other times, the reverse is true. Your numbers, not someone else's, should drive your tax plan. Now, mistake number 3. Binging retirement content without building a plan. This is a big one. The most common mistake I see is people watching, reading, and listening to tons of retirement stuff, but never actually putting a plan into place. Here's the problem. You can end up knowing a little bit about everything, but not actually moving forward. It's like walking around Lowe's buying all kinds of tools, but never building anything. That would be me. I do have a lot of tools that I don't always use. One day you're watching Social Security videos, the next day it's Roth conversions, then bond liners, then annuities, then how to buy and sell options, and so on. You're collecting a bunch of ideas, some good, some bad, but not making any progress. And then all these videos and podcasts can get very confusing with all the conflicting information out there. And then you get stuck waiting for the so-called perfect time or perfect move. So here's my advice. So whether you're a DIYer and do the investing yourself, or you hire a financial advisor, you need to work with a professional to put together a plan. And then a pretty good plan you actually follow will beat the perfect plan you never start. You probably won't perfectly time the market. You probably won't start Social Security at the optimal time. You may. You won't get every Roth conversion exactly right, if that makes sense for you. But you'll be way better off if you have a plan in place and start implementing that plan now. Now, mistake number 4, creating a plan that only works if everything goes right. Some people make beautiful spreadsheets, assuming 9% returns, 2.5% inflation, and 0 surprises. But real life doesn't always work out like that. First off, with my clients, our assumptions are much more conservative. But you also need to stress test the plan either way. Markets will drop. Inflation does spike, as we know. Health issues may arise. Your expenses will most likely fluctuate. And plans change. That's why I stress test every plan I create with my clients. Here are some of the things we ask. What if the market drops 20 or even 30% right after you retire? What if one spouse passes away early? What if health care costs double? Stress testing helps you find and diffuse those ticking time bombs before they go off. So let's move on to mistake number 5, letting fear run the plan. So on the flip side, some people make every decision out of fear. They keep everything in cash or cash alternatives like treasuries because the market's going to crash any day. Or they put all of their retirement savings in expensive annuities or even worse, insurance products they don't necessarily need. Now, don't get me wrong. For the right person, right reasons, and the right amount, certain annuities can make sense as part of your overall retirement plan. Those who are more conservative, have a lower risk tolerance, sometimes like to use income annuities to cover their basic living expenses. But always be careful when someone tries to sell you an annuity, or even worse, a life insurance product as part of a retirement plan. In fact, if they try to sell you a life insurance as part of a retirement plan, just run the other way. A good retirement plan should prepare you for risk. It should have levers you can pull if things go wrong. But the goal is not to eliminate every possible bad outcome. That's impossible. The goal is to take smart, calculated risk that give you the best shot at living the retirement you've worked so hard for. So to recap, the 5 big mistakes I see are, number 1, starting with investments instead of the plan. Number 2, believing there's a one-size-fits-all tax strategy. Then number 3, consuming endless content without building a framework or plan. And then number 4, making a plan that only works if nothing goes wrong. And then 5, letting fear, not facts, drive your decisions. We live in a time where more retirement information is available than ever before, and most of it is free. But reading, listening, and watching about retirement is not the same as doing the planning. You may not need another video or article. You need a plan, one built around your goals, your numbers, and your timeline. And whether you build it yourself or with the guidance of an advisor, once you have that framework, all the information you consume will make more sense and actually move you forward. So that's all for today's episode. If you found this helpful, I'd love it if you'd share it with a friend who's also thinking about retirement. Again, I'm George Jameson, CFP, founder of Capital Wealth Group in Columbia, South Carolina. If you're ready to start building your retirement plan, we can set up a free, no-obligation conversation. And for the do-it-yourselfers, I also offer one-time retirement plans which include cash flow analysis, income distribution strategies, tax planning insights you can implement yourself, and so on. Thanks for listening. Have a great day and happy planning. Thank you for tuning in to this episode of The Retirement Guide. If you enjoyed this episode, please subscribe and leave a 5-star review to help others discover the show. For questions, ideas, or discuss your retirement plan, reach out to me, George Jameson, at Capital Wealth Group. If you'd like a free retirement review, visit our website at capitalwealthplan.com to learn more. Thank you for listening. Stay tuned for more insightful retirement planning in future episodes. And now for the disclaimer. The information discussed in this podcast is for general explanations and education only. It is not tax, legal, or investment advice. Before considering acting on any information heard here, first consult with your tax, legal, or investment advisor. Thank you and have a great day.